Morning everybody and welcome to today's morning market. So today I'm going to focus in on yesterday's interest rate rise within the Eurozone. So the European Central Bank raised interest rates by 0.25%, and that's the 10th consecutive interest rate rise that we've seen. So I'll walk through the decision, but also what's our take on that interest rate rise. Okay, so let's look at the details. So as widely expected, the European Central Bank, the ECB, raised rates by 0.25%, with the deposit rate now standing at 4%. So this is the highest level that interest rates have reached in the Eurozone since 2001. If we just dig a little bit more, like what actually came out of the commentary. So the ECB hinted that borrowing costs in the Eurozone had peaked. It said that Thursday's increase meant that interest rates have reached levels that, maintained for a sufficiently long duration, will make a substantial contribution to the timely return of inflation at the ECB's target. The ECB added that the Governing Council will continue to follow what they describe as a data-dependent approach to determine the appropriate level of interest rates and how long they stay in restricted levels. A solid majority supported the decision, although Christine Lagarde did say that some members actually preferred to pause. And just finally, just looking at the growth forecasts, the ECB have pulled down their growth forecasts for this year into next year. So for this year, the numbers are now 0.7%, down from 0.9%. And from next year, numbers are 1%, down from 1.5%. Okay, so what's our take on this? So we've discussed a lot in morning markets around central banks in the developed world, that they're cutting interest rates, and the reason why they're cutting interest rates is because inflation is very elevated. Now, that's actually worked. Inflation has come down. It's a lot lower compared to what we've seen in recent history, although still is slightly elevated compared to central bank targets. Now, what's our take on yesterday's rate decision? Well, it looks very likely that the ECB won't raise interest rates any further from here. So what they'll do is potentially pause for now and look at the economic growth data, look at the inflation data, and then decide at what point do they start to pull back interest rates. How did asset markets react? So we saw a little bit of weakness in the euro. So euro versus the dollar is pricing around 1.066 this morning. So that's a 3-month low against the dollar. You saw 2-year German bonds. So the more interest rate sensitive, basically viewed as a benchmark overall. For the Eurozone, they fell around about 0.04%. And actually, equity markets had a really strong day yesterday, and it looks like they're going to have a strong day today as well. And there's various factors in there. You've got the ECB rate decision, potentially no longer raising interest rates any further. You've also had robust economic data coming through from the US, and also you've had policy support coming through from China. That's everything from me. I hope you enjoyed today's morning markets. Enjoy your weekend, and I will speak to you next week. Thank you very much.